Just finished a fascinating interview with E.B. Tucker. E.B. Tucker is on the board of the royalty and streaming company in the precious metals industry called Metalla Royalty. E.B. Tucker is well-known commentator on the financial markets, on gold, on silver, and it's a fascinating interview where he gives his whole prediction about how he sees the financial markets of the world playing out, how interest rates going negative come into play. He sees the Federal Reserve instituting a cryptocurrency that he believes they're going to call Fed coin. He also discusses his brand new book. It's called Why Gold, Why Now. I was really blown away. It was a fascinating interview, and we get to top it all off and end talking a little bit about his philosophies about Zen and how he's used them to help himself as an investor, as a trader, and just overall to create more happiness for himself. So it's a fascinating interview. I'm looking forward to sharing it with you. So make sure you hit the like button right over there. And right over there, the like button actually does help send this out into the YouTube universe so more people see it. So leave a comment down below. Be sure to check out his book, Why Gold, Why Now? And without further ado, here's E.B. Tucker. Today we have E.B. Tucker. E.B. Tucker just wrote a book, which you can see over his left ear right there. No need to even move it. Why Gold, Why Now? I just finished the book. I thought it was fantastic. Why don't we start with that question, E.B.? Why gold? Why now?
Well, it's funny. The book, as you know from reading it, I wrote the book in 23 days. So it's not one of these things that I set on for 5 years. It's a lot of. I was positive on gold. We started Metalla Royalty and talk about that in the book 4 years ago. But what happened in March was everything changed and rapidly accelerated. What I thought would be a couple of years to play out, happened almost overnight. Every 8-year presidential term doubles the national debt. When it was 18 trillion when Trump went into office, I said it'd be 36, and everybody said there's no possible way. Well, we added a couple trillion in about a week. So in March, so I just said this has to happen right now. And so the book's divided into 3 parts. The first part is well, first it's how did I end up in the place where I am, which is important because before you read a book, you need to understand why should I invest any time in this author? I mean, what is he even talking about? Time is your most valuable resource. So why should I invest my time? So we go through that, but then it's the why gold is what is gold? It's not really an investment. It's an asset. What does that mean? Well, it's important to say, what has that meant over centuries? Let's do that. And let's not bore you to death. I tell stories about my grandfather's gold coins that his mother took to the bank and turned in for $20 when Roosevelt said that only traders, and enemies of the US had the gold, and they took all the gold and then revalued it. So we talk about that, that's a real story. And so we talk about things that are easy to understand. And then why now is, okay, what's the setup now? Because people have got to see that we're in the early innings of radical change. And this is going to go until it ends in reset. And you really need to see that path. And so we show people that things that happen are just dominoes. And there's going to be a series of dominoes. And so we paint that path as we see it so that people can understand how we came to this conclusion. Everybody wants an answer, right? Like a linear answer. But it's not that way. It's dynamic. You have linear as straight line, then you have dynamic, which is multiple variables changing all the time. It's the difference between chess and checkers. And so we lay out that path so that the reader can see what's going to happen. And as you see these things happen, you'll know what's coming next. And then third part, how do you buy the stuff? I mean, where do you even get it, right? People don't know this. And so we go through that and explain how to not get fleeced in the gold market. And so anyway, the time was now. We did it 23 days. It had to come out. It's very relevant. And so, if you haven't seen it, Amazon's they've got me reading it to you. You can read it on a tablet. You can get a physical copy. You do it every possible way you can imagine. We can get it to you because now's the time to understand it.
So the word reset's become a really popular word, and it seems to also be a very polarizing word, even amongst the gold crowd itself. There are the people that say, not going to happen. There's not going to be a reset. This is just going to keep going, and they can Japanify America
And I had Max Kaiser on, and he said that he's like, there is so much more room on the balance sheet, and people,
Yes.
especially in this space, they exaggerate it. It has a lot further to go. So maybe you could talk about that and the word reset.
No, it's true. I mean, it's absolutely true, because what we explain in the book is we used to have recessions. So I'm a bit older than you. So when I came to work in the finance world, we were about to go into the 2002 recession. It was a very interesting time because it was the last real recession. The economy slowed down. You just had the kind of the tech ramp up. People went bankrupt. I mean, the company I worked for at the time bought a competitor that went into Chapter 11 and assumed the assets and renegotiated the debt. And then I was part of that turnaround. That was a real recession. So capitalist economies have recessions, just like forests have forest fires. If the trees fall down, it's fuel on the bottom of the forest. Enough fuel, lightning strikes or something, it sets a small fire, burns up the fuel, green shoots emerge. I mean, this is nature. It's natural. Everything is in a cyclical pattern in the whole world. This is part of the way things are. That's capitalism. But we don't have that anymore. What we have is bubble crisis, bubble crisis, bubble crisis. You can see it. And so what you've got to do is go back and say in 2002, while it was a real recession, what happened was interest rates went down to rock bottom levels for the first time ever. And you created, it had never been that low before. Because remember, if you had $1 million saved up in 1996 or 1997, and you bought 10-year treasuries, you were getting over $70,000 a year in interest income. Now you're getting $5,000 a year. So interest rates used to be set by the market because interest rates are prices. So 2002, we brought interest rates down. Why do we do that? So that people would buy more houses. I'll never forget it. I mean, at the time, I had trades in Rinker Cement, a concrete company that was in Florida. I went to the facility locally. They told me they're sold out for a year. Sold out for a year. I said, this is unbelievable. I bought that stock. I had steel companies, lumber, all these different things because it was a giant housing boom at the time. And that was created because you lowered the borrowing costs down to a level where people could buy things that they didn't even need. Okay, so then we get to 2008. You remember the TARP bailout?
Yeah.
TARP bailout was about roughly $750 billion or something, and it was front page news, panic in the streets. Wall Street Journal, whole world is going to stop if we don't get this $750 billion. Paulson was begging Pelosi on his knees. This was a big deal. $750 billion is a rounding error now. You see, because we got through that, and then we did QE, and then we did Operation Twist, and then we tried to do tapering, and it didn't work. So we tried some other stuff. We did swap lines. We did all these different things, okay? And then we ended up with another crisis. There's no time to even do anything. You have a crisis. Now, it's important to understand philosophically why this really matters, because people in power like the system that we've gotten into now. See, because politicians can't do anything about a recession. If you are in business and there's 5 people in your business in your town, you have 5 competitors total. A recession is going to flush out the worst competitor. The guy who wasted all his money on a jet ski, and a beach condo and spending money on his girlfriend and his wife, and just was like no ability to restrain himself from temptations of life, okay, for spending. That guy's going out of business in a recession because he didn't run his business conservatively. Whereas the guy that worked extra hard, was really mindful about his spending, prepared for a rainy day, okay, that guy's going to stay in business in a recession. But in a crisis, the government decides who stays and who fails. You got to understand that. So politicians like a crisis, bubble crisis, bubble crisis. It gives them a lot of control. Who gets a bailout? Remember, the Fed just bought junk bonds. Right. So if you are issuing junk bonds and the Fed buys them, that's alchemy. All of a sudden, you're issuing paper to the central bank in exchange for cash. You've run your business into junk status. How is that possible? In a capitalist system, that would never happen. So we're a long way past that. But okay, Max and all these guys, they're right. This can go on, but you need to understand the bubbles get bigger, the crashes get more violent, the bubbles get bigger, The crash is more violent. Okay, so we do have several more innings to go. You can't say, I'm going to go load up the cupboard, with physical silver and freeze-dried food because there's going to be a societal reset next month. That's not what we're talking about. What we're saying is they'll run this system to the red line until it breaks and they lose control of it, and then they'll set the new terms of a new system. That's what we're talking about. It's, okay, you're a student of human nature and why things happen, and it's much deeper than just someone giving you the answer. The power of incentives. You told me about your experience in economics class. Economics is it's the science of incentive-based decision-making, if you really want to get down to it. People respond to incentive. And what's your incentive if you're controlling this system? Your incentive is to hold on to control as long as possible. Mm-hmm. You're never going to cede control of the system. Just forget about it. You have a cartel. What are you going to do? Create competition for yourself? No way, man. You hold on as long as you can. And your methods and means become increasingly desperate. So that's what we need people to see, is that Max and those guys are right. You've got a long way to go. Okay. How fast will it happen? I don't know. I didn't know there would be a virus scare and it would result in trillions and trillions of dollars of printing. But what I did know was that gold at the time, there was only about 10 trillion worth of gold in the entire world. That's every ounce of gold that's ever been mined in the entire world. And so they created, in a matter of weeks, almost as much money as the value of all the gold that's ever been mined. And so we can talk about why that matters, because people that don't understand what gold is might say, well, what does that have to do with anything? But it has a lot to do with what's happening right now. So,
yeah, that's interesting. So when you say that it can keep going on like that, you just mean bubble crisis until, for instance, something like inflation gets bad enough where a bunch of people freak out or people stop using the US dollar as much. That type, you need something like that to occur for this pattern to eventually stop, or no?
Basically, it's not inflation though. So
and
the
AD,
problem
the reason
right now,
I ask this first before you go on is because when you're trying to talk to someone that isn't, for instance, a gold bug, and Bitcoin people have the same general philosophy. They have a different expression of that philosophy, but they agree with the same principles. But when you tell people, they say, this is going to go on far past our life. Why are you so worried about it? And so that's kind of the frustrating part for me. And that's why I ask you that.
No, I understand. I mean, and you have to remember that we're not trying to win converts. We're not evangelizing. We're showing what looks like a highly probable path. And more than that, we're explaining the incentives that are in play and the likely choices that will be made down that path. And so we're not trying to pull people onto the path. And that eliminates a lot of the frustration, because some people, for example, I have a friend who sold an insurance business. He's got $10-12 million from that. And he's like 72, 73. I've known this guy for 15 years. And he's like, what do I do now? And I said, well, 10, 15 years ago, I was telling you, you've got to get your head in the game, because you're going to work your whole life for this lump sum, and then you're not going to know what to do with it. I mean, it's like a huge liability, right? I mean, so anyway, so my point is that a lot of times if people have no steps on the path, and then you're explaining to them what a reset is, they're like, they think you're talking about something out of a sci-fi movie. And we're not talking about that. We're talking about the type of scenario where you go from what we have now to negative interest rates. Well, why would we have negative interest rates? Very simple. Because the Fed has had trouble creating enough inflation to keep the system blown to its proper size. Remember, when you have a debt-based system, if it shrinks by 10%, all bets are off. Everything breaks, because the system needs to grow, and it needs to ideally grow at 2-3% per year max. That way it's not growing too rapidly, but it's growing fast enough where businesses that are heavily levered can just do enough business to be able to refinance those businesses, sell to the next owner, and the system keeps going. When it's built on leverage, if revenues shrink, they can't service debt, and you get deflation. Now, you get inflation of things you need, and you get deflation of things you own because there's been too much money. The problem is right now the world is flooded with money. So think back to economics class. Supply goes way up, demand goes down. Look around, you got too many roads, too many luxury apartments, too many hotels. I mean, the hotel industry, the tourism industry right now has been clobbered, and nobody's talking about it. But you have too much of this stuff. And so when you have too much of something, the return is zero. I mean, there's no point, because you can't generate enough of a return to justify that. So right now, one of the problems we have is deflation. Now, how will the Fed react to this? Well, they've already tried buying treasuries, and they've already tried flooding the government. I mean, the government has a huge amount of cash on its balance sheet right now, like the actual treasury. Forget about the Fed, but like the actual treasury has cash receipts have surged. That's why they're talking about, should we give people some money? Should we eliminate the payroll tax? I mean, what should we do? Should we give it to cities? Should we steal it? I mean, like everything's on the table, right? Okay, so you get into this scenario where you have too much money and you can't generate that growth that you need. You see this, like, remember I talked about 2002 recession. They lowered interest rates to a level where housing just lifted the whole economy out of a recession. Boom, it was an unnatural event, and it created distortions. Everybody was driving around where you live in yellow Hummers, right? Remember that? And with towing jet skis and buying Lake Havasu condo or something that they didn't need as a timeshare. I mean, It was crazy, right?
Yeah,
so it was unnatural, and it created the next series. So let's get back to why the Fed would like negative interest rates. Very easy, because if you have $100,000 in the bank and you get a letter from your banker and it says, we're going to now start charging you 1% per year to have the money in the bank, what are you going to do? You pull it out of there.
Right.
You're going to pull it out, and you're going to either put it in the stock market, but maybe you don't like stocks, so you're going to buy real estate. But real estate doesn't have much yield. It's already fully leveraged, and so real estate, you might only be able to make 3%. And anybody that owns a lot of real estate knows the building falls apart at about a 2% rate per year, and the property taxes are going up. So, I mean, maybe that's not a good deal. Maybe you're going to spend it. You might just spend the money. Either way, the Fed accomplishes its goal. If you build a stock market, you keep the stock values high. If you buy real estate, you spend money at Home Depot, title insurance, closing costs, realtor makes money, mortgage fees for the banks. If you spend the money, go on a cruise and do all these things, you stimulate. Any way you slice it, you stimulate the economy because of the power of incentive. Do you see how this works? Like,
absolutely. That's a really good way to describe it. Yeah.
That's one step along the way. Then you go to the next, because that'll run out of steam. Because then people want to have a bunch of cash. Right now, everybody hoards money because they're scared. So like they hoard up their money, put it in the bank, all these different things. Okay, so that'll fix that, because the amount of money in money markets got to like 4.5 trillion or something. We have a chart in the book. It goes up at every crisis. Okay, negative interest rates will pull that money, shoot it out into the economy, and give you like a year or two of growth. Growth. What the growth is it makes it where heavily indebted enterprises don't have to go bankrupt, because sales kind of like come back and they're able to sell to another owner who's also heavily indebted. And so you kind of kick the can down the road. But eventually, as we know, because nothing is permanent, that will then fade. And what will you do next? Well, you'll probably do modern monetary theory. Do you want to know what that is, or is it too much?
No.
Okay.
Keep going. No, I think this is great. It's a good explanation of how, for that question of how does it play out. So go.
Yeah. So now let's say now we're a few years after this. Now we have the problem of, nobody wants any cash. It's hot potato. They're tossing. Okay. Well, and then people, well, wait a minute. Now the economy's slowing and I don't have any money. I mean, so now panic. You have another crisis event. Help us. You always go back to the same people that created we're like whipped dogs, right? Like we go back to the same, please, a bailout, please, anything, give us any, take $100 from us and give us $1 back. I mean, it's like the same thing every time. Okay. So the geniuses there, they say, well, we've created, and all these things are named with acronyms, right?
Right.
Like CARES Act, HEALS Act, TARP. TARP sounds like something for the camping trip, like to keep you dry. It's all these things have. CARES Act sounds compassionate.
What's the new one that got denied? I think it was like Heroes. Oh no, Heals. Yeah.
Yeah, Heals. Yeah. It's ridiculous. So okay, so I call them alphabet soup because it's in a bureaucracy. If you work for a huge megalomaniacal company, you know that like they use these acronyms to coordinate, like structures and everything as an acronym. You start speaking in acronym language, you're really brainwashed. Okay, so MMT, modern monetary theory. Well, all this is, let me tell you simply how this works. Okay, so when you sell a bond, if you're a company or something, what happens is you sell a bond to the market and you put a rate of interest on that bond, say 5%, and bond buyers assess the books of the company and say, you'll probably pay the money back, so we'll buy the bond and you're going to pay us 5% interest, whatever, and then eventually the bond is due, okay, and the company then gives you the money back. That's how bonds work, okay? So for the Treasury, what will happen with MMT is they'll just have one bond for $1 trillion and they'll sell it to the Federal Reserve and it'll have a 0% interest rate and it'll never mature.
Huh. And that's how they'll get liquidity. That's how they'll get money. Okay, that makes sense.
Correct. And so it's technically the same system. Like, because see, the Treasury used to run auctions. Like when I was first in finance, I mean, you'd watch the wire, like see what the Treasury auction did. How was the bidding? Because you have primary dealers of the Fed, which you know all about. They have the exclusive right to bid in the Treasury market, and they mark those up to clients. And if people don't know what we're talking about, the Michael Lewis book, Liar's Poker, is an excellent book for people that have limited experience because he tells all these great stories of the early days at Solomon. And you kind of see how the business worked, and the purpose of the primary dealers. But MMT keeps that same structure in place. What happens is you have that one bond, any size, 1 trillion, 2 trillion, whatever you need. And the Fed, so what happens is the Fed creates dollars. It has the power. The Fed actually is very misunderstood. The Fed has the power, the exclusive right to create currency on behalf of the United States, basically. Like that's, the Federal Reserve note. That's what it says. I mean, I have at the office here, I have a $20 bill from 1922 that is redeemable for gold.
That's cool.
If you want to look at these online, just do some Googling. I mean, the gold was $20 an ounce, and the $20 bills, some of them had on the back redeemable for gold. You could go change them in for an ounce of gold. Like, so the Federal Reserve issued those too, but like slowly over time, it obviously, like we talked about how this eroded, and it's natural to want to use this. I mean, what would you do if you had the exclusive power to create the United States currency? I mean, I'm sure you're going to tell me you would do all these wonderful things, but knowing human nature as you do, it's very difficult to manage that kind of power over time. It's natural to start believing that you're godlike. So okay, you have this MMT, you have all these bonds issued to the Fed. The Fed's given you the money back, and you spend the money on your running the government, building some ships and paying people not to work and all these different things that you're doing, and then you go back. So you just have this increasing pile of never maturing 0% debt. Now, it's very interesting because there's a lot of people that are for this that have written books about how this will be great because it will change life as we know it from a competitive system where people do things because they have to, sustain themselves, right? To a place where and part of this becomes the next step is paying people not to work. I mean, because the next logical thing is, well, if we can get all this money for free, we'll just tax people to punish certain people. We use taxes as a way to calm, certain behaviors that we don't like, to punish certain things. And then we'll take some of the money and give it to people to not work so that they'll vote for us, right? And people have written books about how great this will be because if you don't like your job, you can just quit because you have a basic income, right? So you can do what you want to do. But here's the problem. Who wants to run a sewage plant? I mean, no one. So who wants to work with high voltage? No one. I mean, so you make a lot of assumptions that. I'm also a student of economics. I mean, economics and philosophy. I mean, if you're into that, you start as you learn, you build this vast network of knowledge where you start realizing like things are not that complicated. Like this world, this market, this life, it's not that complicated. Like once you see it, once you feel it, once you learn it over decades of being interested in this type of thing, things start looking so simple to you. It's almost dangerous because you become isolated, because it's difficult to talk to people, because your brain sees something that they don't see it.
How do you think I feel living in Encinitas, man? Everyone
I know very well how you feel, because my sister just left. So I'm well aware of how you feel. But it's a journey. And so you don't cling to you don't have demands about how the journey's going. You have preferences. And your preference is probably going to be to go to a place that allows more liberalized thinking. The funny thing about liberals is they're some of the most bigoted people in the world, because when it really gets down to it, when you stop listening to what they say and watch what they do, they're not tolerant. And what's funny is the libertarian-minded people are actually the most tolerant people in the world, and then people brand them as like radical fascists. And it's amazing. I'm thinking, what are you talking about? Like, when's the last time you saw a libertarian person harassing someone of a disadvantaged class? Never. I mean, it's like, don't steal my stuff, man. That's like
just leave me alone.
That's basically like, do not steal from me and do not kill me, because to take my life is not fair, right? Beyond that, it's do whatever you want. So anyway, my point is, you're probably going to follow your path is going to make some turns, and a lot of people, this is happening to a lot of people where you live right now. You're not the only one.
Oh yeah, it's happening everywhere here in San Diego. Everybody I meet seems to be wanting to leave. So let me ask you, when I thought what you just said was so great, explaining from negative rates, then you go to MMT, and this goes on. So then you get to a point where eventually how this is only your opinion of how you see predictions playing out, but then you see MMT come down, AOC's president, and we're doing this MMT, and then you get to a point where how does the reset come into play? There's just far less economic growth at this stage, and there's a lot of like stagflation, and then kind of what happens.
Yeah, and who needs growth? Who needs growth when you can decide who gets the money? I mean, that's the whole, because see, remember, every time through this, there are people that are gaming the system. Like you go back to the housing thing we talked about in 2002, there were people gaming the system. They were gaming the system on the mortgage level. In Florida, where I live, we have this joke here called Florida Man. Florida Man is like this, uncontrollable sunburned guy that like is always up to no good. But Florida was like a huge mortgage fraud place. There's all these CNBC, fraud show, where they have like the, it's actually, there's all the shows about Florida where they were just putting multiple mortgages on the same house, and people had no jobs. They had these ninja loans and all these no job, no income, no assets, give you a loan. Okay, so then you had scheming at the higher level. A great thing to study if you want to go down the rabbit hole is what happened with AIG, because Greenberg was pushed by Spitzer out. Spitzer was a puppet of much more powerful interest, and they put Greenberg on trial for like allegedly misappropriating shareholder funds and all this stuff, and it was nonsense. I mean, I think, and the suit went nowhere, and they pushed him out. And then the AIG Special Products Division, which had been a very small division under Greenberg, which Greenberg controlled AIG for Star International, STARR. That was the original. That Greenberg was there from Mr. Starr, like way back in the day. So I mean, Greenberg built that business into what it was. And the Special Products Division had created this like synthetic insurance products, that you could like carve up, CMBS into tranches and insure different parts of it. And See, this allowed financialization. So this was a game. This was gamed, right? Because remember, most of the banks got payouts for that insurance. Remember this one?
So how do people game MMT then?
So you keep going. There's always people gaming. So when you get to MMT, it's like you got this giant piles of free money. There's going to be people benefiting from the giant piles of free money. I mean, it's like any third world country. I mean, you've got a few people living behind, spiral barbed wire in mansions, and you've got lots of people living in favelas. I mean, so there's always people that are connected and they're close to power. So whoever your leader is at that point, you have people that are close to power, and if leadership changes too radically, you could be in danger of losing because it's not an economic system. It's not like you built a business and you have property rights, all this stuff. You like in Cuba, you get a license to run a factory. You get a license to do something. You're just rich. And then if you lose the license to do something, you got nothing. I mean, it's like you got to be close to power. So you have to spend a lot of your time being close to power and not in actually making your business something that can stand on its own, which is what we think of as the United States. So that's changing. So as this goes on, you're going to get to the point where the system starts to unravel. A couple things happen. One, some people don't want to play anymore. So some people say, like, have you ever read Atlas Shrugged? The whole point of Galt's Gulch was that people could go there and perform their task of choice in a little community, and they checked out of the game. They were non-joiners of the game because the terms of the game became unappealing. Right. So most people have never read Atlas Shrugged, by the way. They have an opinion about it, but they never read the book. But that's the purpose of Galt's Gulch. Well, what Rand was trying to illustrate, philosophically speaking, was that if the game becomes too manipulated, like if the terms of the game become so unappealing that rational people don't want to play the game anymore, they begin to check out. So you have some people checking out of the game, and then you have mobs of people at the lower level receiving, universal basic income, and then after a few months, it's not enough. So you have strife at the top, strife at the bottom, and the only people doing very well are the people that are close to the system. So what's the next thing to do? You try force. I mean, obviously, you're always going to try force, because the human way of thinking is to make something happen, right? Like no, I'll force you to do it. Like that's where people typically go when their status is threatened. You see this all the time in relationships and business situations. It doesn't work. And it's actually as holding things loosely is the way to control them. Gripping them tightly is the way to create strife and lots of problems. Okay, so you'll try force. At the end, you'll try capital controls. Can't leave, can't take your money out. Branding people as traders that are non-joiners that don't want to do stuff. Then you'll see bank holiday. Bank holiday is Sunday night. President goes on and says that there's lots of subversives out there that are hurting the system, and he'll have examples of some poor lady that has no medicine because whatever. It's like this is an anecdotal thing, and then they'll say the Federal Reserve Chair will say, look, the banks aren't going to open tomorrow, and then you'll rush to the machine, and it's limited withdrawal. Okay, but this is okay. Here's what's going to happen. Then there'll be a reopening, and the reopening will then have different terms from before the bank holiday. This is not new, by the way. Roosevelt had a bank holiday. I mean, this is not something that's like made up. I mean, bank holiday, that's why you have a Federal Reserve controlling the banking system. FDIC. I mean, this is the whole thing is like set up for centralized control. I mean, your bank doesn't freely operate by itself. It reports to a Federal Reserve monitoring, and this is the banking system, which is controlled at the top by private entities.
Then what happens when they reopen it after bank holiday and you get that far down the road?
That'll work for a while. That'll work for a while because like in Greece and Cyprus, when you could get 200 euro or something a day. So that'll help for a little bit, stave things off. But ultimately, what I think is going to happen, this is controversial, but I think that the U.S. will, at that point, will move to a cryptocurrency that is a centralized blockchain, which means that the blockchain has it has all the features of the blockchains you know about. but it's controlled by one.
Mm-hmm.
And that means that every single dollar can be, you can have dollars, I think they'll be called Fed coin. And I think this is already in development. Of course, we have no way to really know. Okay. But I think that the private market, people of our generation, your generation, perfected this technology in the crypto boom. Because if you notice, I was around Bitcoin in 2009, 2010. This thing was like $1 back then. And people thought it was just some like computer coins that were just like you're wasting your time to like string together a couple laptops to mine them. Okay, well, when you look back on it, what you see is that it was an idea, and that the idea was perfected by miners who were capitalist speculators, right? Who the technology has improved rapidly. I mean, think about like to find the next piece on the blockchain, like to solve the next portion of the blockchain. In the beginning, it was quite easy. Now, I mean, I've been to the biggest Ethereum mining operation on the planet. You've never seen anything like it. I mean, it's so loud, and you have so many GPUs strung together that you had to have this thing in Iceland so that you can cool the building. And you look at you just go, man, what is going on here? I mean, but my point is I'll tell you what's going on is that technology is being perfected, and ultimately they'll mandate this type of currency. Now, here's what you got to understand. There'll be a fixed conversion into that. That will be set by whoever controls the US. So, your debts and your assets and your currency will be fixed into this new method, which you will have no option. I mean, try getting around on the largest bill now is 100. I mean, it used to be 10,000 back in the 60, like a 60, I think 4 or something. They took those out of circulation anyway, sometime in the 60s. But imagine having a $10,000 bill, in the 20s when gold was $20, you're walking around with 50 ounces of gold in paper form. It's insane. Okay. Now you got $100. I mean, Encinitas is really expensive. Like we could go for burritos and coffees and stuff. And I mean, we might have change for the parking meter. I mean, it's like, imagine what that's going to be like in 10, 15 years. So I think people need to see the whole path and realize that you've got to think about this from the perspective of people in power. I mean, money is not like everybody at a lower level wants money, but people in power don't want money. They want power. It's different. It's like once you have a certain amount of money is totally irrelevant. I mean, like it all becomes about power, control, influence, ability to get your way. That's what it's all about, right? Like that's people need to understand that are trying to watch this to like better their life financially. The guys at the top don't care about that. That's irrelevant. Like you've got to have power. That's what they're going for. So put yourself in the mind of a person that has that power. And what are you thinking about as the system goes down these paths that we're talking about? All we're doing is showing you a path and explaining the decision-making process that's going on down this path and the influences on those people. So that's all we're doing is we're simulating, and we're saying, the path might be a bit different. I mean, I didn't know there'd be a virus. I didn't know that would happen. I mean, something would happen. I didn't know that would happen. I didn't know it would accelerate that quickly. I was having dinner at a guy's mansion in the Bahamas that's an investor of ours in January. And I was telling him, look, I mean, I think maybe gold breaks the old high and it goes up to 2,500 and things get a little speculative, and that's it. And he was like, you're dead wrong. It's going to go to 3,000 to 4,000 and then we'll have to reassess and see what's going on. I mean, he was dead right. And I mean, we weren't like it was kind of like heads you win, tails you win, because right. I mean, we were positioned for that either way. But I got to tell you that I was a bit conservative. And I think it's because I've been in this market so long, and we can talk about how that happens. I think it's important for people to know that I almost was a little too conservative with how I thought things would play out. When you go through a down cycle, that's when you really go to school. I mean, that's what it's all about. I mean, you don't learn that much from experiencing like the guys in crypto. If you owned Bitcoin as it ramped to 18,000, You didn't learn nearly as much as you did if you thought 15 was a good bottom and you bought that and you went to 3. You really learned how that thing worked during that thing, right? So you become hardened, like your thinking becomes crystallized. You become much stronger intellectually during that process. That's what's happened to me in the gold business, and that's why at times I err on the side of being conservative.
So then, the whole time this is happening, Fed coin pops out, interest, negative rates, all this shit. So this whole time, gold just going boom, 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 boom.
Maybe,
what?
But you got to remember, the thing that's interesting about gold is that it doesn't depend on anything.
Mm-hmm.
That's the key feature of gold. So the apartment building needs people to pay rent. The bond needs the company to pay interest and pay you the money back. The stock needs profits or more people to buy the stock. Mm-hmm. Gold doesn't need anything. People think real estate is a great hard asset. It's not, because it's bolted down in one place. The tax rates can go up without notice. You have all these problems. I mean, you have all these problems with real estate that people don't consider. I'm not saying it makes it a bad asset. I just mean it's not so simple as saying that this is a hard asset. Gold has nothing on the other side of it. You have the gold in your hand. What you have is wealth in your hand. Now, what we're talking about is a war against your wealth. That's what we're talking about. So you have wealth in your hand, and it's immune to the forces that are at war with your wealth otherwise. Do you see how this goes?
It's important to make it that simple, I think, too, just to really grasp. But it's basically what it is: a war for your wealth. That's what it is.
Yeah. So now we're on the Fed, and we're connected. We're close to power. So we're very, very rich. Okay. And so we're watching this all happen. We hate gold. We hate gold because we're like, this gold is a real problem because we can't have a bank holiday in people's safe. If we don't, you see what I'm saying? Like, that's why they don't like cash. I mean, they're like, do the negative rates to get you to, okay. So we don't like gold. Now, so we want to keep the price of gold under wraps. Let it go up a little bit, but don't let it go up too much. Well, the US is not the only power in the world.
Right.
Remember, so in the book we talk about Nixon going to China. I mean, it was really like, got to feel bad for Nixon, man. I mean, the guy, like, he had it rough. I mean, he was fighting against this there was huge inflation in the 60s. You had this situation in Vietnam I have a great book here on my shelf called The Politics of Heroin. That's all about, the opium triangle and Lao, and it's fabulous.
Really into that.
It's fabulous. And now enough time goes by that you can read the stuff and you're not, in any kind of like disagreement, because people, so many years go by that they lose energy on this. But Nixon's dealing with all that. And then, they've got this problem with all the gold is being sucked out of the treasury because you're fixed at $35 and the dollar is like being massively overprinted, and so the foreign banks are coming and taking, how this works.
Right.
Okay. Nixon's best move, it actually was a smart move given the circumstances, is he's like, we got to find cheaper stuff. I mean, we can't have you using a frying pan that's made, here in Pittsburgh by a guy that's, we got to find cheaper stuff. And that's really, when they went to China, when he flew to China, I mean, part of it was political to like get into the news in a positive way. But part of it was like, what else are you going to do? You got to open up a new source for life, because the average person's butter and eggs and frying pan and bicycle and car and everything was becoming really expensive because the dollar was losing more value than was kind of allowed to be known to the average person. Okay, so you open up this beast, and the beast is most people don't understand how Chinese think as a culture. Enterprising, excellent merchants. Pretty rational with the way they it's not a Western, it's a different personality. Like culture in the West, we think this is how it is everywhere. And if we just import this Western culture, well, it's not that way, as you know. Like, people think differently. Like, you make friends in Eastern Europe, you start realizing that they think about things a tiny bit differently. And you have to understand that if you want to do business with them. So look, the Chinese take this new opened market and they make the most of it. So basically, now they're like a serious group. I mean, if they were a bunch of kind of profligate, drunken sailors that had no common sense, they would have just spent the money, and they'd still be like one big rice paddy over there. But no, I mean, it's like, it's a serious force to reckon with. And who knows what their GDP is, but it's a lot. And it's a lot more on a world basis, than it was in 1971, 2, 3. So, okay, let's not lose this point. So we're on the Fed. Now, we want to keep the price of gold down, keep the rise measured. But these guys are like, well, why are we going to buy treasury bonds anymore when MMTs go, we'll buy the gold? So we're between a rock and a hard place. I mean, we can make the gold illegal, and I think they'll do that. I think there'll be a confiscation via excise tax, I think is probably likely. But you can't make the gold illegal for the Chinese. I mean, it's kind of like when it was illegal to own gold from the 30s until 74 in the US. People don't really know that. But that's why my grandfather his mother had to turn in all the gold, was because it was illegal to have it for almost 40 years. So you can make it illegal, but overseas, everyone was, and then Americans that were connected to power during that time were able to move their gold. Of course, it was illegal, but people did it.
Right.
Okay. So you can't really fully control gold is the one thing that capital controls and a total, administrative attack, and moratorium on ownership can't really fully contain. Do you see how this works? So not only is it wealth here that's not connected to this system, which is a tumultuous system at this time, and going to get worse. It's also sought after by other people that are involved. Because the U.S. is over a quarter of GDP or something. I mean, you have like a lot of other people out there. It's 5% of the population of the world, roughly. People always post about these numbers. Like, no, it's not. It's 6%. I mean, okay, it's about 5% of the population, and the GDP is like a quarter of the, roughly. Maybe a touch more. And so, what about the other people? I mean, these people, it's a war against their wealth too. It's not just your wealth. It's like, if you're over, picking up.
And China and Russia and these places are really smart because they have been buying a bunch of gold. I mean, Jim Sinclair and Bill Holter think that they're basically going to control the spot price for gold in the future.
Maybe. Let's take a piece like with Russia. I mean, I was there in 2015. I have some friends there. I was there for Victory Day, which is their World War II day, of remembrance, which is very powerful. I was there for the 70th anniversary of it. And growing up in America, you don't even know they were in the war. No. So it's like they lost like a shocking number of people there. And I was there. Putin made this speech, and he said that back then during the war, like, we faced this dangerous threat to our west, and the Allies sat by and did nothing, and we had to defend freedom. And now we face something similar today. It was pretty powerful, right? Because like, you listen to what he's saying, and it's like the U.S. only got into World War II at the very end. Right. I mean, it was raging. I mean, this is just people. I've been to Belarus, seen all these, like, you wouldn't believe the destruction that it's the loss of life is just staggering. And okay, so I was there. I did lots of fun stuff there and experienced kind of what's going on. My friends are telling me what's happening, and the currency was all this and that. What was happening was the U.S. in 2014 laid down all these sanctions to punish Russia by doing what the U.S. kind of weaponized its financial system, sanction all these certain people there, block them out of the SWIFT system, all these tricks. Right. Well, what happened was Russia decided to run a surplus. So they lowered their cost per barrel of production, which had gotten bloated, with like waste and, poor management and all these things. So they lowered that. They tightened up, at every place they tightened up because they couldn't sell bonds on the foreign market because they were blocked out of the system. Okay. So they had no choice but to tighten their belt. So the U.S. actually, the whole thing backfired.
Helped them. Yeah. I mean, that's the crazy thing. Yeah. I couldn't believe that they have like the best balance sheet in the world. Basically.
Amazing. I mean, look, if they were your competitor, you were running a hardware store and they were your competitor, you stand no chance. These guys, they're so disciplined. So now, are they disciplined all the time normally? I don't know. Maybe not. I mean, philosophically, they maybe have not always been this way. Okay. But these sanctions were cathartic. This was an event that they decided to get serious and to buckle down and like you say, huge surplus, huge investment in infrastructure, huge savings, huge buying of gold. I mean, they produce a lot of gold already.
Right.
So at every turn, this was something that they used this was just protein. And so now you're in a situation where, yeah, I mean, it's really something to think about because the Chinese, I mean, who knows how much gold? I know I went to see a gold project in Cambodia in 2014 and 35 Chinese guys showed up the day after they did a financing deal with these guys and they just hit the ground and just hit the woods with all these tablets and I'm like, what are they doing? He's like, oh, you won't believe how fast they're going to figure this thing out. And all the gold goes back to China that's produced. So
do you think that China and Russia at this point, you've got a Fed coin, gold's going nuts. Do you think at this point, this is when China and Russia try to take control of dominance of the world by instituting a gold-backed currency, or what do you see?
I don't think so. I don't think so. I don't think a gold-backed currency is so likely unless there's just some massive world revolt. I mean, how are you going to revolt anymore? You have no weapons. Your money's all controlled via smartphone. Everybody's tattletaling. I mean, your neighbor's got a dental shield on and dishwashing gloves trying to dial 911 to report you for having a barbecue. How are you going to revolt, man? What are you going to do?
Oh my God.
You can make a poster or something? I mean, I don't. You know what I'm saying?
Oh my God.
I don't think there's going to be any way to demand. You go back and read U.S. history. These politicians 200 years ago, they were terrified about being killed.
Right.
They were like, there's no way I'm going to vote for that because these guys from my district, they'll kill me.
Right.
And now it's like, what are they going to do? Facebook post and we'll just block that. Yeah. We'll just, the Facebook monitors will just shut you down right away. So yeah, I mean, I don't know what people are going to do, but I don't know that there's as much cooperation between Russia and China as you might think. Really? There's a good book from the 90s by I can't say his first name, Brzezinski. His daughter is the one that's on the MSNBC show with Joe Scarborough. Okay. Mina Brzezinski. It's her father, Zygmunt. I can't always pronounce his name. But the book is called The Grand Chessboard. And he worked in Carter's administration. He was quite interesting, a Polish guy originally. And his premise was after Perestroika, you were entering this period where the Eurasian landmass was becoming the focus of attention for world power. And he just kind of walks through all these different important features. Now that's been, 25 years ago or so. And what's happened? Well, the Chinese looped the whole thing with rail and fiber and ports and everything. That's pretty interesting. I mean, I don't think he would have seen that coming.
Thinking of your
right.
I'm still laughing thinking of you describing that.
Yeah.
That was so funny.
Well, so you think to yourself, what do the Russians think about this? Well, I mean, the Russians are a lot more Western minded than people really think. I mean, go back to the Tsar, times, and a lot of times nobility was like British or nobility and Russian nobility are fairly like closely linked. I mean, I'm just saying it's not so radically distant from Western European life compared to Chinese culture,
right?
Which is significantly different. So my point is that I'm not so sure that these two cultures just all of a sudden, I mean, they can trade gas, they can have bilateral currency agreements, they can have ports and rail and trade and resource swap, and they can do all that stuff, and they can say we both are tired of the US bullying us. They could say that, but I'm not so sure that they form up, like a world power. So where does all this go? I mean, look, the interesting thing is this is the jungle gym in grade school, right? I mean, you get to the top of it and there's like 4 guys trying to rip you off that thing, and you thought you were friends. I mean, so it's just the nature of things that it's a dynamic. Power is dynamic. It's not static, and it's always changing. And what we're doing is we're trying to talk about a period of time that comes after a lot of these events, all of which are creating new sources of wealth, confiscating and destroying other sources of wealth. They're changing attitudes. They're changing mindsets. They're creating factions. There's a lot of moving parts. And so when we go out like this, we're really trying to tell people the best thing we can do is show you how we think. I used to write a newsletter for a long time, and I would tell these people, don't just turn to the last page for the portfolio update and the stock pick. Read the thing, because I'm telling you how I thought about the stock pick. And if you read about how I think about this for 10 years, you don't even need me anymore, because you've awakened your own ability to think and perceive. No, we just want the answer. Well, I mean, there's a process, and it's not that complicated. And when you read my book, I mean, you see, I'm just laying out to you exactly what I see in simple terms, and it really is so simple. Everybody's scared off by these things. It's not that complicated.
So, real quick before I move on to another question that I have, do you think Fed coin and all that stuff? You're 41. You told me. Do you think that happens in your lifetime?
I think it does.
Yeah.
I think it does. The question is, see, I mean, I'll check out at some point of the game,
Okay, so then how are you going to check out because you own so much equity in your company and other gold, silver stocks and so much gold and silver that you're going to cash everything out and disappear? Or what do you mean?
That has its day, right? That has its season. It's not like you beat the game, it's not that way. So, I mean, by checking out at some point, you start to become less tied to opportunity, because it depends on what your priorities are in life, and for me, like, amassing piles of money for the sake of amassing piles of money is not really that much of a motivator. I want to do what I want to do.
So what does checking out mean to you when you say that?
That means you get to a place where you say, I'm not playing anymore, or I'm not playing at the same level, and I'm not concerned if I lose status because I'm not playing. I don't care, and I'm not in debt. I don't think that my state of mind is tied to any consumption metric. And
you'll just cash out a lot of your investments and just kind of disappear a little bit more?
It'll start that way, because I don't also care about power, and I don't have any desire to achieve any sort of influence over anyone.
You don't want to be a Facebook fact checker?
No, I know. I mean, listen, I had dinner last year next to Evelyn de Rothschild.
Oh, really?
I did. And I thought two things. One, I thought if this guy read my blog back in the day, he would have me killed tonight. Yeah. But I also thought, I mean, man, this guy, like, I mean, it's interesting vibe from him. You know, I mean, he's a statesman and he's calm, cool, and collected. He's very, very powerful. It's one of the most powerful people you'll ever be around, you know, and so it was very interesting to observe his demeanor and, you know, how he carried himself. I don't have any desire to have an influence.
What are you going to do when you check out? I'm curious because, like, I look, you know, I've interviewed so many people that I learn from and I consider them mentors, even though they're really not. We don't have much of a personal relationship, but you know, you're one of those, but you're closer in my age. So I think about these things. We just had a baby, and I'm like, you know, I think about these things in my head. So I'm just genuinely curious what that really means.
Well, I love learning. I love learning and I love experiencing things. I mean, I'm all the time going on trips that seem like they don't have any purpose. You know, see something. If you told me about something interesting, like I met Jeff Gunlock. He told me about, we were seeing a museum where he's giving a bunch of money and there was a light exhibit that everyone liked. And he said, oh, that's Dan Flavin's work. You know, it's really funny about Dan. He has this whole light exhibit in the middle of the desert at an old abandoned army base in Southwest Texas. And I said, wait a minute, tell me more. And he's telling me about this. And I went out there, I saw it, you know, I went there and spent a week and saw it and saw a bunch of other stuff. And Donald Judd's foundation is out there. And
what age do you think you're going to do this at if you're 41
What's that?
now? What age?
Well, I mean, I'm kind of doing it. I'm doing it to a degree now. It just so happens that what I'm saying is that for me, the goal and the constant practice is to let go of demands in life, to let go of concepts, beliefs. I mean, beliefs are the real problem in the world, right? So it's not thoughts, it's beliefs. It's not faith, it's beliefs. I mean, your beliefs are at the core what cause all the problems on a personal level, on a group level, all these things. And so working on letting go of my concept is when you like your child is learning concepts from day one. You know, that's the colors and that's this and that's good and that's bad. And you need more of that. And you got to make sure you have enough of that. And you don't want that. And you got to be happy. You can't be sad. You know, you're being trained in the West this way. Okay. Well, then you have an awakening and then you start thinking, well, that's nonsense because concepts can get you in trouble. Well, what's the opposite of a concept? It's perception. So in the markets, perception is what it's all about. It's not about your concept. It's about perceiving what's happening. You know, like if you go into the market with concepts, the market just takes the concepts and just whips you to death and takes all your money because you're ignoring perception. So as you carry on and go through this, like the gold trade right now, I'm always telling people, you got to watch out for ideologues. When people are ideological about the gold trade, it's really dangerous because you sit all the way.
Examples of some of the dangerous ideologies in the gold trade.
Well, I'm not going to name names because
give me no names.
Maybe they've come on your show.
Ideas, though.
You have people that just say like the Fed is printing money. Like for example, from the 2012 to 15 when gold was in a real serious downturn. I mean, mining stocks, some of them went down 90%. You know, gold itself went from 1900 to 1050. You know, bullion companies went out of business. I mean, people went to jail. You know, there's no financing. This is a really bad time. And you had people that the Fed is printing money. The Fed is doing QE. The market is going to crash. You got to short the market. You got to buy. Okay, well, yeah. I mean, a lot of those things, a lot of that ideology has merit, but it's completely going in the face of perception. At the time, the thing to do was to let go of your beliefs about gold and the Fed and what should be happening and what's fair and what's unjust and all these things and say, these guys are not going to let this stock market go down, period. Like it doesn't matter. And they've got the ammunition to do it. So it's not like I'm not interested in gold, but I'm not saying that because of these ideological beliefs I have, gold must, go up or something. Okay. Right. It's practically speaking, you're saying this gold is not going to go up right now. I mean, like or it might, but it might, but it doesn't look good. So instead of gripping the wheel like this, you're just barely touching it so that you're moving with it. This is the goal. Okay. Now get back to your question about what am I going to do with myself? Well, that's my focus more than I have to do this. I must do this. This needs to happen next. What if this doesn't happen? I've got to do it. Every time I start thinking that, I'm working on let go of that, because it's this belief that ties me to an outcome that's not that enjoyable. I mean, the purpose of life is to enjoy yourself. People have a really hard time with that. It doesn't mean to be a heathen. It just means if you're not enjoying yourself, you need to ask some serious questions. Like, what are you doing? What are you waiting for? I mean, you're going to die. You're going to die. And that's going to be it. And this is a game. And so how do you want to play the game? Well, and it doesn't mean be happy all the time. What it means is you want to take life as it is. You want to take life as it comes. When the Fed does negative interest rates, you don't want to be so upset about this that you can't sleep at night. You want to take it as it comes. The power in life, in my opinion, the real, not power like we were talking about earlier, but the real joy is going with the flow, because everything that's behind you is already happened. And everything that's in front of you hasn't happened yet. And so you have this moment of time. And when you think about this and you work on this, you have a lot of, you enjoy life. And it doesn't mean that only good things are happening to you. You should really enjoy life. And so probably my suspicion is I'll focus more on that. And I will not be hunting for, something to do. I mean, maybe I'll stay involved. I mean, right now I do the board work and corporate advisory and have lots of investment activities and stuff, but I enjoy all that stuff. I mean, with Metallo on the board, I'm not clubbing the CEO to get him to do stuff. I mean, we started the company at $1.20 Canadian almost 4 years ago, not even 4 years ago. And it's up over 1,000%. It's like 12.75 Canadian today, right? 4 years. I mean, that's a reasonable, that's not like an overnight success. I mean, that's like a good amount of time. Yeah. I mean, we bought 50 assets. We bought something, average of every quarter along the way. It's been really hard work. The board guys have all had to do, everybody on the board's different. Everybody has a unique skill set. So Metallo is like right now, it's like a band where you have all the members of the band are really good at their instrument and they're just having a good time, and you see them and you're like, man, these guys are fun to watch because it's grooving. But it's not going to stay like that, because everything has a life cycle. Everything has a life cycle. I mean, you get up to, company's 475 million Canadian market cap, it started at, I don't know, very low. Now you get up to 2 or 3 billion. I mean, you have all kinds of other problems that are happening. It's like, tax people and, 100 subsidiaries and short sellers and hedge funds and regulators and exchanges and bear markets. I mean, man, it's life. So my point is, instead of demanding, you go easy. If you say to the band, I like playing and I'm going to keep playing as long as it's fun. And if it becomes no fun at all, it's filled with tension and strife, and you force me out of it, I'm just going to walk away. I mean, this is what I'm talking. I'm speaking not about the company. I'm speaking about like a philosophy.
Yeah, you're speaking about your question I asked you about, how you leaving the game and when it's time to do that. But let's talk about while we're still in the game and give you an opportunity to talk a little bit about your vehicle. With your company. Now, we've seen gold go up to about 2,100, then we saw it dip back down, and I forget what we're at right now, a little over 1,900. Where do you see it playing out this year, and how does your company come into play as a useful vehicle? Maybe you could talk a little bit about that.
No, it's a very important question for people to pay attention to, because you're more right than you realize. So gold, I think, will go to 2,500 this year. We've accurately called it all the way. We could be wrong now, but I don't think that we will be. That's a 25% increase from this
right
level.
now. Okay.
That's right. Basically, I mean, it's, it's, what was it? It's 1960.
No, it's 26%.
Yeah, 26%. Yeah. You look at the YouTube comments and be like, this guy's a moron. It's 26. Okay. So that's a nice gain, right? So if you have bullion, you have a nice gain, but you really didn't make any money, because the dollar's weak and your purchasing power has modestly changed, and the gold didn't create something, right?
Right.
Okay, so what Metalla does is it owns royalties, and a royalty gives you 1% or 2% of all the gold production that comes out of a specific predefined property forever. So what you get is a perpetual, non-dilutable carried interest in a mineral asset. Now, what that means is can't be diluted. So if the mining company issues 1 billion shares at a penny, it doesn't matter because you have 1% of all the production. It's a free carried interest because you don't have to pay up in the future to maintain it. And so it's perpetual because if the mine shuts down for a year, the royalty is just sitting there. It's tied to the mineral asset itself, not tied to the operating company. So when you get 50 of these things, you end up with hundreds of thousands of ounces of gold in the ground that's in mine plans, that's being drilled and proven. So, you have 500,000-600,000 hectares of royalty land every single year. There's so many drill holes going into those hectares with all those results coming out from all these different companies. I mean, we have Pan American, Agnico, Barrick, Newmont Gold Corp. These are the royalties that St. Barbara, I mean, that's a great company that's got a super project in Canada on the Atlantic. I mean, we have royalties on all these different assets. And so you end up with this diversified income stream. But income is not important. What's important is exposure to ounces in the ground. So everybody's always talking on the message board about, there's not enough income. It's the price to earnings is too high. It's totally ignorant. What you want to see with the royalty company to maximize value is you want to see assets in the ground that are proven. So you want to see, you're better off to have Agnico's next project, a royalty on that, than you are to have Agnico's current project. Because the current project is producing now.
You're saying that because we're in a climate right now where gold is continually moving, so you're getting an appreciating asset, basically. Okay, yeah, and then that also
remember in
your income
finance
and those
school,
things.
You have net present value. So you're taking the future stream of cash flow and you're backing it up and say, what's $1,000 a month for 30 years worth today?
Mm-hmm.
That's what you're doing. And then the $1,000 a month is now $1,200 because the gold price went up. Do you see what I mean? So,
yes.
So you capture this huge future stream of payments that hasn't quite started yet. And it's Agnico Eagle. We're not talking about, ABC junior company that used to be a cannabis company and decided to go into the gold business because it got hot. We're talking about Agnico. So what you want to see with the royalty company is my opinion. I mean, some people don't, is to maximize value is you want to see development assets. You don't want to see far off exploration. They're still trying to figure out if there's anything there. You want to see, we defined X number of millions of ounces and we think the deposit is more, we're going to keep going. And then we're going to start the tunnel and we're going to, start mining in 2 years. And, we found another 100,000 ounces. I mean, that's another 1,000 ounces for you. We found another 100. I mean, you get the quarterly reports from these companies, you control F search the projects that we have and you read about the drills. I mean, these guys will have dozens of drills poking on our property and they'll tell you all about it. They'll be like, we hit this, we hit this, we hit this, we hit this. And, we're not sure what's there, but next quarter, we're going to do some more. And then, that's becoming a resource. And the royalty company it captures all that. And it doesn't have to keep paying up for it. It doesn't have labor problems. Doesn't have, look, of course you could have government seizure. I mean, it's
right.
Look, you don't want to have all your royalties in Honduras only. I mean, you want to spread things out. Okay. Certain jurisdictions are better than others. But the point is The goal of Metallo, this is what people, if you hear what I'm about to say, I'm telling you the secret sauce for Metallo, because nobody has done a good job of copying us. The goal of Metallo was Brett and I used to manage money. We used to run a mining stock fund way back in the day during the last cycle. And we always noticed these royalties. Like you'd see a project by, a company and you'd be like, who is this LLC that owns the royalty? What is this? We figured out there was thousands of royalties out there that were privately held in the third party market, I think is a fair name for it, right? Oh. This is not initiating the royalty. It means like some old guy has a royalty, he's had it forever and ever. And we said, what if we went to that old guy and offered him stock in Metallo in exchange for the royalty? And we just did this on Core Mining's best asset, in my opinion. They might disagree, but it's one of their most positive cash flow assets they have. It's in South Dakota. It's called Wharf. There was an old guy. I just talked to him on the phone Saturday. He called me to talk about the book, but he owned this royalty for decades, and it pays him millions of dollars a year. And we worked on him for 3 years, to sell us part of that royalty. And he sold us that for stock. And somebody asked me in an interview, why would he do that? And I said, because he realizes that trading that royalty for stock in a company that's expanding a diversified stream of royalties is going to give him a far higher valuation than owning just the one royalty, which actually doesn't get that great of a valuation because it has accidents and flood and temporary shutdown. And, you have 50, 100, right, 200 or whatever. You don't really care if you have a flood because you're like, well, there's something's going to flood every month. It's like going to happen. Right. So the point is that we built Metallo that way. Now, here's what matters to individual investors. Don't listen to what we say. Look at what we do, because there's half a dozen new royalty companies out there that their presentation is like ripped off our presentation. But it's like, let's see if they can really do it, because the problem is that you have to be a diligent steward of your stock. So the old guy that drives the Ferrari that sold us the royalty in South Dakota for millions of dollars, he's not going to trade that for penny stock.
Right.
Like it's junk. And so, but when you say to him, hey, don't believe us, call the people that did. So, we've done 18 transactions. And you start calling these people and they're like, wish I had sold them more. You see what I'm saying? Like because what happened is they showed discipline. They kept using a disciplined model. They kept walking away from deals that didn't make any sense. Consequently, the valuation kept rising. Right. Nothing crazy. It's not like it goes to 1,000% overnight. Right. It's just that you do a deal, it goes up a little bit, it kind of trades around. You do a deal, it goes up a little bit, trades around. Anybody that can't see the pattern is just not willing to look. Right. All we've done is build. That's all we're doing is build. And just to be really clear, it's not me building. Okay, Brett Heath is the CEO and is the best deal maker I've ever known. He's a wonderful friend of mine, and I've had a fantastic relationship with him over the years in business, and I'm really proud to help him with this. My role is on the board, but Brett is the brains of the operation. But you have to have a guy putting the deals together that understands the business and has integrity. Because if you burn out your people that you do deals with, you got nothing. It's right. Just they're not going to hold your stock, and it's a disaster. You can't do more deals, and the reputation in this business catches up with you, good or bad.
Do you have a price in mind, a certain gold price at which you're going to sell out of your portfolio positions in companies?
Well, sort of. Let's give people something more valuable than a finite price. Okay. What's going to happen? I'm pretty sure of this. Because of my involvement in the royalty business, I'm very close to the market for what's going on in the gold sector. Is when we were first doing deals, people were very negative. They thought the gold price would go down, and so now they're not quite as negative, but they don't really think it can go up. They think, well, it might go to up $50 more and then chill out there for a while and then, crash to nothing. Okay. So the mood is changing. Now, once we cross up 2,500, I mean, look, these mining companies, Newmont, Barrick, Agnico, go look at these earning reports that are coming out. It's crazy. They are making so much money because they're disciplined. They just got tortured in the market. 2012 to 15. They just got laid out over the tracks, and they're scared. So they're not doing reckless things with money. They're not saying, let's look for gold at the bottom of the ocean. Okay. So this is what happens at the top of a market. We're not at the top yet. We're still moving. So my suspicion is that deals and opportunities and business in general will start to become more challenging because the field will start to take on more new players. And that's every part of it. That's the royalty business. That's the mining business. That's the investor business. That's the mutual fund business. That's the ETFs. That's the asset managers. That's the bullion dealers. That's the TV commercials. I mean, like the whole gamut. And I think what will happen is that my enthusiasm will start to wane when business becomes more entrenched with these types of business school type people, and you know how this goes. Now, I'll probably start becoming less interested, but that doesn't mean that it's finished yet. That usually I become less interested quite a ways from the top. Fair warning. Okay, it's a big mistake that I've made in my life. Is I'll lose interest in something and it'll start to annoy me, and I don't want to do it anymore. And then it has a long way to go. So. I think people should understand that. But I think that'll happen in the gold business. And I don't know if I'll sell out. I just know that, I'll decide at that time. But there'll probably come a point where I just say, like, I don't ever sell things like one time. Right. I start to make, like, I don't buy things one time. I look at my insider filings for Metalla. I must have bought stock hundreds of times. I don't know. I just indiscriminately bought it every week, like every 2 weeks, every 3 weeks, whatever, whenever I had some cash, all the way up. I just bought stock at a 1030 Canadian, and which seemed expensive. Now it's 1275. That was like 2 weeks ago. So the point is, I haven't just been like, I'm buy one time and then sell, it'll probably get to the point where I'll say the evaluation is so high. And you know what else I'll say? This is important. I'll say, man, I kind of want to buy an apartment building or something. So say like, right. That's life. That's life. That's life. That's how people need to understand. You're not going to beat the game. What game? You're not beating people. You're not in competition. You do what you want to do. I like to do things that interest me. I bought rental property in 2009 and 10 because I thought it was interesting. I lost interest on it and gave it to a manager, and I still own it. But it was $10 a square foot. I thought that was an interesting price. I was like, you can't, $10 a square foot. You can barely pour the concrete for the thing. So, but there was no buyers. There's no buyers. But really, I could have stayed in that business. I could still be in it now. I had enough scale with people and stuff to stay in that business, and the real estate kept going up for a decade. But I was like, now it's like $30 a foot. I'm like, who needs the headache at that price? Right. Now it's like $100 a foot. It's like, so my point is that, like, people should be fairly warned that I'm not some person that ever expects to call the top price within 10 cents, and then who cares? It'll start losing interest for me. I'll start losing interest at some point, and I'll find something else to be interested in. That's how my life goes.
Fascinating. I know you're a busy man, and I could easily go for 4 hours hearing about all these great things. I don't want to take up too much of your time. Love to have you back on. Let me ask you, kind of in conclusion, you've given us so much great things and a lot to think about in terms of trends and what the future might look like, and how knowing that is important for buying gold and owning a stock such as yours. let me ask you, if you're kind of just racking your brain a little bit, is there anything that I haven't asked you or that you think is important to cover, or you've been thinking about over the last week that might be a good final thing to put a cap on before I let you head out?
I don't think so. I mean, I think for people, the gold setup is the primary focus right now. I mean, take the time to get a book or my book or someone's book about gold, listen to it. You could listen to the Audible in a very short amount of time. Understand what this is about, because it's the war against your wealth. You've been working your whole life. Why you've been working? You say, oh, I don't care about money. Why do you work? So I can have a better life. Okay. I mean, that's wealth. Come on. I mean, you save $100 a week. That's $100 is wealth. That's wealth. It's not $1 billion and then it counts. That's $100, $1,000. I mean, you're in this system. Wake up. Now's the time to wake up. And we might be, both of us, or someone's guidepost on their journey. I mean, you've had a journey, I've had a journey. You meet these people in the journey. They have something, and you're ready for it. The teacher appears when the student's ready. If what we're saying resonates, now's the time. I mean, this might be that's why I wrote the book, was because I know there are people that this is the time is now. They know something's wrong, but they don't know what's wrong. And so now's the time. And we'll have me back and see if any of this panned out. I'm happy to be held accountable.
I think it will. Give us here a quick 30 seconds. I wanted to talk more about it. We'll have to do it next time. But you say in your book how you don't get so wrapped up in politics. You've had a lot of little, through passing, you can piece together a lot of wise things that you have to say. You obviously have a lot of wisdom about managing your emotions and being grounded in your spirituality, so you don't get swept up in every which way of the emotions of this world. For someone that's having a difficult time right now, they're watching this all play out, they're getting really angry, they're getting really frustrated. What's something that you do you seem like you do a really good job of not getting swept up in the emotions of the world. What's a final thought for that?
Well, you got to break down what you're telling yourself. And usually what you're telling yourself is, this should be different. This should be different. You should be different. And you're highly disturbed because it can't be different. Okay. So this is for relationships and politics and all markets and all kinds of situations. So if you want to massively change because in my opinion, the goal of life is to be literally minimally disturbed as possible. I mean, if you're walking around disturbed for days on end, it's a problem. Okay. I think, I don't want to never be disturbed, but I don't want to be disturbed for long periods of time, because if I am, something is wrong with me. It's not the external circumstances don't cause internal feelings. So politics is a huge problem, because people get so upset, they lose friendships, they alienate family, they lose money, they create high stress in their body over something that doesn't matter that much. And then they argue with you that it does matter. Okay, fine, it matters so much. Okay, so you vote, you should vote. You vote if you want to vote, but you don't have to vote if you don't want to vote. Well, yes, you do. No, you don't have to do anything, including stay alive. You don't have to stay alive. It's illegal to kill yourself, but you don't have to do anything. That's the number one thing. And so when you're disturbed, you need to think to yourself, the external circumstances aren't causing my internal feelings. And politics is it kills relationships, it robs people of joy, and it's not the politics that's doing it. It's not the politics, it's you. That's what people need to understand. You can have strong political preferences, and let go of demands. And I don't have a television. I think people should try not having television. I don't mean have a television with only internet where you can watch shows all the time. There's literally not a television in my house. There's artwork. And people say, what do you do with your children? We just talk about stuff. talk about stuff, we look at books, we look at pictures, we tell stories. I show them pictures of me in weird places and tell them stories and embellish the stories. And, so that's what we do. We look at artwork, we go outside, we do stuff. And that's a big help because we're not taking in constant stream of programming. Think about it. Television programming. It's called programming. People say, they look at it, put the guide on. The guide is to see all the programming. Which programming would you like? Select programming. I mean, think about it. It's crazy.
Yeah.
So, and then you think this doesn't have an effect on you. I mean, it does have an effect on you. If you if you work out a lot, you get in better shape. If you fill your mind with garbage, then you live in a garbage heap. I mean, it's like whatever you're doing becomes your reality, right? So, I mean, watching endless streams of well-organized programming by people that once you meet, I have friends and families in the US, no names mentioned, that control media. They don't watch media. So, like, believe me, I mean, they keep up with what their competitors are saying. Okay. Like, right. If they've got some story that's hot, it's getting a lot of attention. I mean, you want to know about that, but they don't take this stuff seriously. I mean, you take it seriously in a way because it's like, okay, I mean, you need to be aware of what's happening, but I mean, taking it seriously, demanding. It's your demands and your beliefs that get you in trouble. And if you think about it for a while, the light bulb might go off one day that, your cousin that has polarity with you politically is not what's making you mad. It's you saying he should be different.
So it's your demand about it that's creating your own suffering.
You're demanding that he should be different. He shouldn't be like that. He shouldn't be a communist. Oh, really? He shouldn't be a communist? Are you sure about that? Because he is a communist. So, I mean, he shouldn't be that way. He's not okay that way. I mean, it's no different from saying someone's, race or religion or gender or something is not okay either. You can't do that. So I mean, think about it. Why can't you do that? Because it can't be different. That's why you can't do it, because it can't be different. And it creates a lot of strife when you go around demanding that people be different, situations be different. Now, can you want it to be different? Yeah, sure. Can you do your part to do something? Yeah, of course you can do that, and you can even be disappointed when it's not different, but demanding that it be different is where the disturbance comes from. And let me just sum this up for you, because I'm not just talking psychobabble. This is what you have to do in financial markets. You have to do this in financial markets, or else you're going to lose all your money and you're not going to have any fun doing it. It's going to be painful because you're going to fight and kick and scream and lose, and it's going to be awful. And maybe you'll wake up, or maybe you'll lose everything and blame someone else. But the stuff I'm talking about is very true in when you want the stock to go this and it goes this, and you demand it should go this, it's just going to go more of this. Do you see? Yeah. So it's your relationship with money is harder than your relationship with your significant other. I mean, really, when you get down to it, I mean, relationship with money is very complicated, and it's a real journey in motivations and beliefs and life outlook and clinging and greedy. And I'm just emailing with a friend that has a large trade on right now, and telling me that it's instinct, and I'm telling him about this story of a guy that was fighting a bear that could read his thoughts, and the only way to defeat the bear was to use instantaneous decision making. Do you see what I'm saying? Because every time he planned to attack, the bear knew his plan. And the lesson there is to have a way of thinking where you don't deliberate. You study and you do your best, and you think, and you have an instinct, and you do it. And you're not clinging on to what if I'm wrong, because I can't be wrong, because that would be terrible. And you can't be wrong. What would people think if you're wrong? They think less of you. Really? They're not thinking about you at all. So don't worry. So, try to perceive what's happening instead of try to cling to something. So I know that maybe that's too much for people.
No, that's perfect, man. I think I always try to end like that because, a lot of people are going through a hard time. And I think that's the simplest way to think about it is when you drop your demands around it. I think that's really good advice for us. So I am really glad we could end that way. And all of us, besides buying your stock, all of us can also drop our demands and
there you go.
Your book too.
Take life as it is.
Cool. Thanks, EB.
Okay.